everyone. Today we have Mark Chisholm here joining us to talk about the exciting new collaboration with Fluence and Anaplan. This is giving Anaplan a whole new set of functionality when it comes to close and consolidation. So we're really excited to learn more about how these two platforms are going to be working together and all the benefits you can get by having Fluence now on our side. So Mark, whenever you're ready, go ahead and take it away.
Thanks, Elena. I'm just going to go ahead and share my screen. I have a relatively short deck to share. So let's go ahead and go through it. We'll have some questions at the end as well. So again, thanks everyone for taking the opportunity to view this video. So let's go ahead and go through the new Anaplan-Fluence combined offering and value. And again, from the point of view consolidation. So here's our agenda for today. So we're going to cover the closed consolidation process, which I'm sure many of you will already be familiar with. We're going to talk about the current state of consolidation, the ideal end state, implementation approach, and Q&A. So let's talk about the closed consolidation approach. And again, some of you will have probably most of this, some will not have all of this. So it really kind of depends on the unique nuances of your organization. But you generally start off on the far left with a preparation process where you go through and you do your maintenance potentially around entities and accounts and things like that. You update mappings, you load exchange rates, you update ownership percentages, you roll your continuity schedules, and you basically open the period and you notify people that the books are ready for close. Now, again, this will depend on your organization. Some organizations have a centralized close process, others have decentralized. Centralized means you have basically one core group that is basically basically importing the data from the ERP system and so on, and basically doing the consolidation entries, etc. Decentralized means that you actually have people in the field across your different geographic locations that are then responsible for importing, validating data, bouncing intercompany, etc., and then basically posting those entries and then having that roll up to corporate, who would then layer on adjusting entries and so on. But you have some preparation that typically goes into it, and then you start loading your data, right? The trial balances, subledger details, intercompany details, etc. And then there also could be a manual data collection process where potentially there's some data in the that you need to capture both for quarterly, yearly, and monthly reporting that is not necessarily in the ERP, like for instance, roll forward schedules, like for fixed assets, etc. So you might have Excel templates that are collecting that data manually. And then there could be other data collection schedules as well, such as AR/AP aging, etc. Others, other types of schedules. And then you've got this part in the middle, which is what I call the engine. And again, some of you might have a consolidation solution in place already, where that software is kind of performing the task of the engine, which is like validating that data, translating it, eliminating it, calculating it, consolidating it, and then doing notifications, etc. Others are who may not have software already in place to do this. They're actually doing it most likely in Excel. So we'll talk about in a moment. But then you also have like an adjustments process. So once you've got data translated, validated, etc., there'll be an adjustment process where you're posting journal entries as well. There also might be cash flow adjustments where, to get to a finalized cash flow, there might be some reclassifications you might have to do, etc. So that occurs. Then you've got the dreaded, at least I've been told is dreaded, is intercompany matching, where you have to basically balance your duties and do firms between entities if you have intercompany. There's generally some challenges around that. You've got validation checks on it, you've got exception handling, etc. And you also will have like some level of account reconciliation as well. And then potentially also some approval gateways that, okay, I think I'm done. Let's have that reviewed. And if it gets rejected, maybe I have to go back and review and make some adjustments. And then ultimately you've got the baton passes to corporate. They layer on their top side adjustments. They start the reporting process across all the three different financial statements, as well as any kind of disclosures they might have to do, regulatory reporting. Again, some of you may not have it, others will. Then you've got your traditional like report packs, which could be both external and internal. And then you go through a process of, once everything's closed off, you lock the period, you roll over, you close out current period net income to retained earnings, you roll forward your balances, and you update composite exchange rates from a closing perspective. And again, some of you may not have some companies don't have foreign currency, so you potentially wouldn't have that step. But this is generally the process. And again, some steps you'll have, most steps you'll have, some steps you may not have, and other steps that you may add on to this. So, but again, this is the general process. How do we see this process typically being done? Well, believe it or not, whether you have a solution in place or not, generally there's a lot of Excel in this process, kind of covering all of these different stages. And again, in some cases, Excel is used as the actual engine itself. So yeah, we definitely do see a lot of Excel, a lot of manual work in these processes, regardless if you have a solution in place or not. And we'll talk a little bit more about that as I go through this. The logical question is, isn't there a system out here that does this? Well, there is. But let's talk about sort of the evolution of that. What do we see right now? Well, let's take a little bit of a journey through history in terms of the consolidation market, if you will, for software. And you can see that there's kind of three different versions, if you will. There's Consolidation 1.0, 2.0, and 3.0. What I'm going to do first is I'm just going to highlight a few of these companies. So we have Longview highlighted, we have Clarity Systems highlighted, and we have Tagetik highlighted. And it just so happens that through my career, I actually worked at each one of these organizations as they went through these phases. So I've been kind of a part of the evolution of consolidation solutions for many years now. And I've kind of seen that evolution firsthand. If we talk about Consolidation 1.0, it was really on-premise, right? There was no notion of cloud at that point. There was basic consolidation capabilities, and there was extensive coding. And if we think about, the solutions, in that section, very, very heavy scripting requirements around consolidation. And as well, what that meant was that the solution was IT owned and maintained. With these scripting languages, you might find some astute accountants that picked it up. I was actually one of them, but in the most cases, very much outside the realm of your traditional consolidation user, who's an accountant, who's sort of versed in Excel and versed in the accounting guidelines and so on, and able to apply their expertise more from a functional perspective, not from a technical perspective. Then as we move into Consolidation 2.0, you began to see your first glimpses of hybrid cloud. What is hybrid cloud? Well, really what it meant was hosted, or commonly referred to as single tenant. What that meant was that you could log into the application from a cloud point of view, but you had the ability to determine when you wanted to take upgrades. Some view that as positive because once something is working in place, it's really volatile to maybe take an update that might force a step backwards. So people liked having the ability to choose when they did their updates. But what that meant though was that they began to fall behind from a software point of view, because they started to age out of the development path of the software vendor. So they kind of started to fall behind, and they would have to take more and more and more updates in order to catch up. And also, too, what you didn't have back in those days was any kind of regression testing done by the vendor, which meant that it was really on the shoulders of the accounting team to test that new version and make sure nothing broke. And back then, a lot of things did break, and they'd have to roll back to a previous version, because as we know, the consolidation clock never stops, right? Because as soon as you've done one month end, the clock starts ticking on the next month end, then it starts ticking towards quarter end and year end, et cetera. And so the accounting team really never has, a lot of time to kind of take on the regression testing. So we didn't really see a lot of updates, organizations opting for upgrades back then. What's termed as limited coding, I think that's a bit of a slippery slope, because there was still coding back then, maybe not as intensive, but still was there. And as a result, you now had that ownership still in IT, but maybe a little bit more towards the consolidation team member user, if you will, just a little bit over, maybe not, definitely not fully there. And then we moved to Consolidation 3.0, which really was, a cloud first technology, which means, and if you think about, if you had a vendor who was in 1.0, evolved to 2.0 and evolved to 3.0, what does that really mean? Well, that really means technical debt, because basically you had to migrate functionality from on-prem to the cloud, or to hosted, and then migrate that to multi-tenant, which is true cloud. You're going to have technical debt and baggage that kind of comes along with that. So you would have some challenges kind of evolving through that timeline, if you will. So we did see some technical debt back then as well. But these new, Consolidation 3.0, like with Fluent, the Anaplan-Fluence offering is cloud first. It's got advanced consolidation capabilities, so no more basic. It's only the part of the iceberg that you do see. More on that a little bit later, but also what you don't see, which is also becomes very important as organizations grow and evolve. There's a lot of out of the box capabilities, which really puts it in the wheelhouse of being finance owned and maintained. So that's really the evolution of the consolidation market, if you will, and the vendors that play in it. So is there a solution that addresses consolidation process? Absolutely. And the Fluence Anaplan offering addresses that from a, pure cloud first, pure business owned and maintained, really for the first time. What are some of the statistics that we see out there that are a little bit, I would say, worrying? As an accountant, worry is kind of part of an accountant's DNA, right? So, 97%, basically stated that they lost sleep over missing deadlines, making mistakes, and lack of adequate controls. And that's what you find yourself in when you're in an environment where you may have, you may have a consolidation solution, but it's not connected together, and you have to use Excel to kind of bridge between it, or you may not have anything at all. And it's amazing the number of companies that I've come across, very large organizations that shall remain nameless, that are actually closing their books using Excel. And if you think about that, and you think about the open nature of Excel and how easy it is to kind of corrupt that from a overwriting things, lack of safeguards, lack of scalability, lack of security, etc. That's where that 97% comes from. So Excel in your process, absolutely a worrying aspect. 84% of companies with performance management software kept using Excel anyways. And so that sort of supports that other slide, which is even though you may have software in place, chances are you've got some Excel in that process, because generally that, Excel is that bridge that kind of connects the different data process and people silos together, where they're not able to collaborate on a single platform. And as a result, people fall back on Excel. And the other thing too is what we find with these more technical consolidation solutions, that people don't necessarily know how to make changes. And, they may not have the scripting expertise or technical expertise to make those changes. And so what do? They fall back into Excel, right? And so what we've seen as well is a lot of these solutions evolving to become very expensive data repositories, which means that data goes in, storage capability, data comes back out where people actually do the work in Excel, and then they put the data back in. That's a very expensive investment just to store data. If we think about some other stats that I thought were interesting here as well is, 70% of companies can't compare budgets to actuals within a week of period end. And if you think about, the use of legacy solutions that require complex scripting and also probably a lot of Excel to kind of bridge those silos, that extends the timeline, and where you won't be able to necessarily have that timely information that's needed to make decisions. And if you think about, within a week of period end, 1 week is 25% basically of your month. And if you're waiting a week to kind of do a comparison, you're really running out of time to course correct in that forecast, right? Because the intent of a forecast is to provide that early warning capability so that you can course correct. But if you're having to wait a week before you even have your actuals to understand how close your actuals came to your forecast or not, to be able to course correct, you're running out of time. So again, that's a bit of a worrying statistic as well. 72% of organizations, the close process is affected or greatly affected by data errors. Well, that speaks to what I was saying earlier about the more Excel you have in your process to either compensate for a legacy technical solution that people have forgotten how to use or don't know how to use, and they rely on Excel, or they're not using anything at all and they use Excel to kind of do that. It's going to be, wrought with errors. And again, because of those errors and so on, one of the things that most important to finance is credibility and trust in the numbers. If people don't trust or if there's no credibility in the numbers, that's going to undermine finance's role in the overall process. So that's very important, is to have a single source of truth that's validated, reconciled, and is trusted and believed by everybody across the organization. So that leads to greater alignment, which then leads to better decision making. Some other things too is the Fluence Anaplan-Fluence offering really overcomes a lot of these a lot of these challenges, right? So some of these legacy solutions were, again, because they're more technical, they were too long to implement, and very costly as a result of that. And it required, technical skills to implement and maintain going forward, and really forcing customers to be dependent upon, IT or external consultants to be able to do that. And of course, because they're more technical, the learning curve is much higher. And, users have to basically learn a proprietary technology. And what we found with that learning curve is that people will abandon that curve because it's just taken too long and too frustrating, and they have all their other stuff that they have to do in their day jobs, right? So as a result, the solution just sits there, not being used, becomes an expensive data repository, and then basically the organization just ages out of the solution. So what is the Anaplan-Fluence offering, and what does it provide? Well, first of all, it's extremely easy to use because it is a graphical workflow-driven approach where essentially each business unit, and again, you could have a centralized closed process or decentralized, but basically you're given a visual process that you can then follow along and interact with directly within the application that gives you the various steps you would need to perform the close process, with also gateways that determine when the next step in the process is opened or not, depending on whether the requirements of the previous step were satisfied. So it's really a graphically driven approach that doesn't require the user to leave the software. It's also very familiar because a lot of the schedules that you would need to, potentially populate, like from a let's say from a fixed asset roll forward perspective, a lot of these data collection schedules are actually in Excel, but they're linked to Fluence, which means that you basically click on a link as part of that workflow process, which is basically task driven. That task could link to an Excel schedule in Excel that would be linked, that would then pop up directly within Fluence and allow the user to then populate that, all with security and scalability and so on enabled as well. And again, you heard me say that Excel was bad for the process. So why are we using Excel here? Well, the key is the right tool for the right job. Excel is good in moderation, so injected uses of Excel to kind of create that familiarity from a user interface perspective, and that's what people are comfortable using. But it's not the be all and end all of the process. All it is collecting data. It's not performing any of the consolidation tasks or the engine tasks associated with the close process. So Excel is great, but in moderation. And what I found about the Anaplan-Fluence offering is that it uses Excel in exactly the right measures to create that user engagement, but also not undermine the close process. It's finance stone, which means there's no code. No coding at all. The way Anaplan-Fluence is set up is that they have pre-configured templates that you would basically then populate as part of setting up the system, like your exchange rates, your ownership register, your intercompany due tos and due froms, etc. All that is set up directly within the Anaplan-Fluence offering, and being able to basically just populate those settings, if you will, directly within the solution itself. And it's very much a no-code approach to doing that. You're just populating fields within the templates themselves. It's very adaptable, which means that it has the capabilities that maybe you don't need today, but will need in the future. Like, for instance, proportion ownership, for an example, right? Where every entity in its current state might be 100% owned, but management wants to grow the business. So potentially there could be some entities that are not 100% owned in the future. And so Anaplan-Fluence has that capability to kind of grow and scale with you as your business changes. So, and again, you don't have to, utilize that capability today. Utilize it when you need it, and it's there. As well, it's born in the cloud, so it's gotten out of that technical debt that some of these legacy solutions will have as well. And it's a single platform across all the critical capabilities. And the other thing I'll point out that's really not on this slide is end-to-end capabilities. So if we think about the close marathon, if you will, right? Where you start off with that whole data collection process, you move through the engine, you layer on adjustments, you've got all of your intercompany eliminations, foreign currency translation, minority interest adjustments, and things like that might occur. All of that is done. All of that is done in the solution. But then you also have like the last mile, which would include things like account reconciliation, also disclosure management, right? Because ultimately the output of the process is the production of some kind of document, right? Whether it be an internal deck for reporting or going to other stakeholders, or it could be also external reporting, to statutory sites and so on. Anaplan-Fluence covers that entire end-to-end process of the close, of close to disclose, basically, is the term that they use. So it's a complete solution. Other products that I've experienced with have to rely on third parties to provide that capability. With Anaplan-Fluence, you've got that end-to-end, all within a single platform. And of course, you've got extensive audit trails, which lead to greater visibility of how things are being done. So you've got that drill down capability, you've got the audit history, and so on. All of that is available within the platform that then users are able to interrogate on their own. And that will then, open up, provide transparency to the process and lead to greater credibility in the numbers. And of course, you've got built-in calculations needed for the close process. So around acquisitions, cash flow, multiple sets of books around GAAP, stat, other reporting standards, as well as any kind of partial ownership accounting. Now, depending on the nature of the relationship, it could be minority interest alignment, it could be equity pickup, it could be full proportionate close or consolidation, if you will. The Anaplan-Fluence platform provides all of that capability. And the end result of this is you've got something that's easy to use. You've got very fast time to value because of its pre-configured nature. All you really have to do is, link in sort of your hierarchies. It comes standard with some hierarchies that kind of go to a certain level, but you're able to kind of configure those to your needs. You're able to adjust the rules that point to those hierarchies to your own, and then you're basically off to the races in terms of implementation. And again, depending on your complexity, obviously the time would vary, but you can implement Anaplan-Fluence in as little as 30 days. And again, that leads to just overall total cost of ownership. Okay, so how should this be done? Well, obviously, I think based on what we just covered in the previous slide, Anaplan-Fluence platform would give you that distinct advantage in terms of this process. Let's talk about how Anaplan-Fluence would compare to other solutions in the market. If we think about core consolidation, in terms of like aggregation, foreign exchange, cash flow, intercompany eliminations, continuity schedule, roll forward, equity pickup, journal entries, etc. Those are core consolidation capabilities that other solutions can easily do. But I would encourage you to look below the surface, because that's where the real differentiation is, which is the ability to do things like acquisitions and disposals, discontinued operations, entity reorgs, right? That entity reorgs is one of the key challenges that leads to volatility, and how does the solution be able to address those, as well as calculating retained earnings, right? Getting retained earnings to balance can be a huge challenge, right? But Anaplan-Fluence platform has that capability. It's also got year-to-date and period activity calculations, as well as maintenance wizards, KPI calculations, time-sensitive calculations, which is very interesting around, we did a reorg, but we want to see kind of how we were back before the reorg and after the reorg. It's got those capabilities, as well as being able to do things like proportion consolidation. So there's so much more below the surface that you should really look at when you're considering a consolidation vendor, and look at the thoroughness and completeness of vision. I think you'll find that Anaplan-Fluence platform is distinct in that regard. If we extend this just to, because I did mention forecasting a little bit earlier. So if we think about, from a planning point of view, a forecasting point of view, again, there's so much more to the surface, right? Where you would have, anybody can do sales and revenue planning, anybody can do headcount, OPEX, CAPEX planning, those kind of things. But it's below the surface where, Anaplan-Fluence is very distinct, because not only can you do all your standard FP&A capabilities, but also demand planning, supply planning, sales and operations planning, workforce planning, sales forecasting, incentive compensation planning, IT projects and planning, as well as, connected planning and connected finance. So by investing in the Anaplan-Fluence platform, you're putting a foundational platform in place that is going to benefit the entire organization, both inside and outside of finance. So again, I encourage you, there's so much more below the surface. Dig down and look at the details associated with that. I think you'll find that really there's only one solution that delivers all of that. Okay, and in terms of how things are going to work together, well, you're going to have, and this is kind of our vision of how we see everything kind of being deployed, you're going to have like different source systems on your left, which could consist of your CRM, your ERP, your HRIS. But just think about all the other systems that you're going to have, right? What we want to do is collect data from all those systems, because some is going to be needed for the close process, others are going to be needed for the planning process. And now what we're talking about is Anaplan-Fluence together as a single platform that addresses your consolidation, close to disclose process, as well as your FP&A, and also other planning process across your organization. So we want as many data sources as you have to bring those into Anaplan. And again, you can bring that data in a variety of different ways, whether it be flat text files, whether it be cloud-to-cloud integrations, whether it be using certified connectors or other orchestration tools. You could bring those in, and they get stored in what we call the data hub. And in that data hub rests all that data. And the consolidation model, which would be one part of that, would grab from the data hub what it needs to then ultimately close the books. And then you're also going to have your other models, which from a planning point of view would need data to support the FP&A planning process. Could be, something for demand planning, sales forecasting, as well as workforce planning, pulling data from the data hub that those models would need to necessary for the forecasting process. So again, what you have is your consolidation being one model, and your planning models being other models as well, but all connected together on a single platform, known as Anaplan-Fluence. And then ultimately off to the right is your reporting capabilities. And I've circled, you'll see here that there's a Fluence reporting capability. And what that is basically an Excel add-in that can connect to, first of all, directly back to the source system using a variety of different connectors, but also to your different models, including consolidation and planning models, using that and actually being able to display data from a multitude of systems on one page and link that data together. The Anaplan-Fluence Excel add-in by far is the best add-in in the market that I've seen. It really provides like leading edge state-of-the-art capabilities that really can connect together your different data sources where you don't have to store data redundantly or twice. It can go directly against those source systems, but also against your consolidation and planning models and link it all together in a single page. So that's how we kind of see how everything will work together from a deployment point of view. And that really ends this presentation that I wanted to give around our point of view on the Anaplan-Fluence platform and the advantages that it provides. So happy to take any questions now.
Thanks, Mark. I think that was super informative. I just have a couple questions, like really drill down and summarize some of the things we talked about today. So what are some of the most common challenges? I know you mentioned a couple of them that companies are facing when it comes to close and consolidation.
Yeah, thanks. I mean, the most common challenges and again, there are many, right? But the ones I see kind of most often are getting your books closed on a timely basis, as well as being able to respond to organizational change. And manual solutions such as Excel, really, and I think I made this point already, but they extend the close process. As do multiple ERPs that potentially would have to be mapped and aggregated. So, as organizational complexity can grow when you kind of have multiple data sources, but also complexity increases when you also have like a lot of siloed tools and data within your process. So that breeds complexity as well. And complexity extends the timeline and increases challenges. Excel typically requires like a lot of like manual work and constant validation due to its open nature, if you will. And organizational change is constant, whether it be newly acquired entities, newly added accounts, or changes in the consolidation structure itself, changes in exchange rates, changes in ownership percentages, new ownership events that might occur as well. That all leads to a lot of volatility that finance has to respond to. And Excel exacerbates these challenges, right? And organizations that even have implemented technologies find themselves also have an extended close process as well, because ultimately you've got siloed technology, people, and processes and data that all have to kind of be brought together. And that's where Excel is used as the bridge to kind of bring those together. But that also extends your time. And your challenges don't end at closing the books. They kind of go beyond that, because there's going to be postmortem on the close, like analysis, right? Now, again, finance, very stretched, definitely sometimes doesn't have time for analysis. But when they do, drill down an investigation usually results in users having to leave the consolidation solution to go back to the ERP to interrogate the transactions that made up that account balance. Under the Anaplan-Fluence platform, they wouldn't have to leave and leave the platform to do that. They can do it directly there and have access to that transactional data if they need it.
So how easy is it to implement and integrate Fluence with your existing systems?
Yeah, so Anaplan-Fluence platform can easily integrate with existing financial systems, again, using from the very basic flat file integration capabilities, built into the platform, but also you can leverage integration capabilities with increasing automation. So you have an appetite for pre-built connectors, APIs, other integration tools that you might have in-house. The platform is very open, right? So you could write an API, you could import a flat file, you could use existing ETL tools as well to be able to link those systems together, if you will.
Can you talk about kind of the biggest components that Fluence has that really improves that accuracy and compliance that other systems might not have?
Anaplan-Fluence platform, improves accuracy and compliance by being very thorough, which means that it addresses all aspects of that consolidation process flow that I showed, as well as other aspects that might be needed, because every organization might be a little bit different. Again, it's typically a prescribed process, but there are subtle nuances between organizations just due to the nature of their industry in which they operate. And again, it's very thorough and allows organizations to tackle the entire spectrum of the consolidation process, such as complex ownership matrices. So they really never have to rely on Excel to supplement the close process. And if you think about compliance, Excel and compliance really don't belong in the same sentence, right? And it tends to introduce risks to others that might be reviewing the books from an auditing point of view. So the less Excel you have, the less Excel you have in your process, the better. Again, right tool for the right job, used in moderation, very effective. But again, not too much. And all the close activities are being performed are on a single solution with enterprise grade security, with audit trail, and separation of roles and responsibilities in accordance with GAAP and standards, which means that ultimately there's less data hops and greater integrity, which in turn creates greater compliance and more automation through the Anaplan-Fluence platform. Out of the box consolidation rules means less manual intervention and more accuracy.
So what advice would you give companies currently struggling with their consolidation process and considering adopting a technology like Anaplan and Fluence?
Yeah, so the advice I would give organizations that are struggling with their close process and kind of looking for a better way is that there is a better way forward. And by making investment now in a platform such as Anaplan-Fluence, you're going to be starting down the path of your finance transformation journey with a single platform that can be that underpinning foundation that you're going to really be able to grow on and extract a lot of value from. And it really can be a strategic underpinning to all areas of your organization, not just finance. And it's going to be paying dividends for years down the road. And you'll also be freeing up valuable resources, including time, money, and people, that you can redirect to strategic priorities. To those that already have a consolidation solution in place, here's a question for you. How long after implementation were you actually back in Excel? And how long does it take you to update your forecast with the latest actuals using your current solution?
All right, well, that wraps it up. Thank you so much, Mark, for talking through the Anaplan and Fluence integration we're going to have soon. If you have any questions, feel free to reach out to us. We have been working in Fluence for the last couple months, really diving into our expertise with both platforms. So we are definitely the ones to contact if you have any questions, and hope you have a great day.
Thanks, everyone. Thanks, Elena.